Now for global business updates, Rotus Oddiri joins us. Good morning, Rotus.
Good morning, Dr. Abati. Good morning, Vimbai. Good morning, Rufai. Good morning to all our viewers out there. We're just looking at China and Nigeria today. We begin, of course, oil prices. Not much to report there. They are still range-bound within the $70 region. You can see Brent crude at $74.95, so it's smidgen under $75. West Texas Intermediate $71.28, but you can see them falling. Nigeria's benchmark, as ever, $77.96. We move to Asia stocks. China stocks, particularly, they are still on a rally. There was the announcement from China, and they followed up today. So you look at the Shanghai Composite Index, also the CSI, the Shenzhen, all those indexes in positive territory. But you see the Hang Seng in Hong Kong also as well in positive. But the Nikkei 225 in Japan, the Kospi in Korea, also the Nifty in India, ASX, S&P 200 in Australia, all those in negative regions. So it's really China who has been leading the way. And why is that? We've got a follow-up. I mean, the Chinese authorities moved quickly. They made the announcement yesterday. They followed it with a cut today. So we got a one-year policy, cut on the one-year policy rate. This is the medium-term loan facility, 30 basis point cut from 2.3 to 2%. This is the biggest cut we've seen since inception. The Chinese yuan actually rallied to a 16-month high against the US dollar, actually going into 6.9 territory, but then falling back into 7 yuan to the dollar territory. The Chinese authorities have wanted to keep that there, which is why you've heard people like Trump say that they are manipulating their exchange rate. Listen to a quote, or rather read a quote here from Bruce Pang. He's the chief economist for Greater China at Jones Lang LaSalle. He says the cut is part of the package, which was announced yesterday that we covered. The market is keeping a close eye on the strength, frequency, and synergy of measures to follow as China strives to achieve this year's around 5% growth rate. It will be interesting. We will find out until the first quarter of next year whether China, of course, achieved its 5% GDP growth rate. Let's jump quickly to Nigeria. I got it wrong. I thought, it was either a hold or a hike. I do know one person, though. Shout outs to Samson Somede of Zrox. He actually predicted that the Central Bank of Nigeria, the MPC, would actually hike rates. So as you look at the parameters, MPR, I thought they would hold. MPR, 50 basis points to 27.25%. Asymmetric corridor is unchanged. And then for the banks, this is telling you that the MPC is really concerned about money supply. A 500 basis point increase on cash reserve ratio, the CRR, for deposit money banks, 200 basis points increase for CRR for merchant banks. The liquidity ratio remained unchanged. Now let's listen to Governor of the Central Bank of Nigeria, Olayemi Cardoso, particularly justifying why they continue to raise rates, acknowledging that inflation headline is coming down. But listen to what he said about core inflation.
The MPC noted that even though headline inflation trended downwards due to a moderation in food inflation, core inflation has remained elevated, driven primarily by rising energy prices. The uptrend poses severe concerns to members as it clearly indicates the persistence of inflationary pressures. Members thus reiterated the need to work in close collaboration with the fiscal authority to address the current upward pressure on energy prices.
Now, let's put the numbers up for you. First of all, I think you should have year on year and then month on month. So if you notice, looking at year on year inflation, if you look at all the parameters, it is only core inflation that actually rose from 27.47% in July to 27.58% in August. Everything else actually decelerated. Same issue with month on month inflation. Core inflation rising from 2.16 in July to 2.27 in August. And it's part of what Governor Cardoso mentioned. Let's quickly, this was a very astute point he made yesterday on FAC allocations that had many in the finance community celebrating that he's actually brought this matter up. Listen to what he said about FAC.
Members were also concerned about the growing level of fiscal deficit, but acknowledged the commitment of the fiscal authority not to resort to monetary financing through ways and means. Furthermore, members observed a strong correlation between FAC releases and liquidity levels in the banking system, as well as its impact on the exchange rate. The committee, therefore, agreed to increase monitoring of future releases with a view to addressing its effect on price developments.
Now, this is something, I mean, a number of finance WhatsApp groups where a number of folks have pointed this out. So just to explain, your Federal Accounts Allocation Committee, we sell oil, right? We take the dollar proceeds from oil, convert them to Naira, and then distribute that through the different arms of government, the federal executive, and then also to the states and the local governments. Now, the issue, though, what he's pointing out there is that not only is that impacting money supply, it is also, he's noticed that when FAC distributions are made, the exchange rate gets weaker, which suggests that whether it's at the subnational or whoever is taking some of that money and speculating on FX, which is impacting it. So that is something that needs to be addressed. And you also heard what he said about ways and means. Very interesting, since we're talking about debt relief and how we get debt forgiven and then how do we get here. The last administration spent 8 years borrowing to keep fuel subsidies where they were, borrowing to keep an unrealistic exchange rate, borrowing for ways and means. That's how your debt balloons back up. Let's also listen to what he said about FX inflows and the need to keep rates elevated to keep FX inflows bring FX inflows into the country.
To attract investments into the economy, efforts must be sustained to achieve a positive real interest rate. This would enhance the economy's competitiveness for international capital, thereby improving the exchange rate.
We have two charts to explain this. Let's first start with the need to have a positive interest rate. Our first chart is our CPI versus MPR. Now, you have two lines. The line above is your consumer price index, headline inflation year on year. The line below is the monetary policy rate. And as you can see, what we've indicated with the three arrows at the bottom was the last monetary policy decision from Godwin Emefiele back in May of last year, where it was increased from 18% to 18.5. Then acting Governor Shonubi, he came in, took it from 18.5 to 18.75. That should be the arrow at the bottom. And then the arrow to the right is where Governor Cardoso took over for his first MPC meeting in February of this year. And then we had that jumbo rate hike from 18.75 to 22. Then you now see that the rate continues to rise. But look at the difference between the line above CPI and MPR. That is your real interest rate. So if you take the 27.25% and you subtract inflation in August of 31.25, you get a negative 4%, which means your real interest rates are still in the negative region. So that's part one. Part two, where he talks about the need to keep elevated interest rates so that you can be competitive. Let's look at benchmark interest rates from select countries. Remember, we went through this deep dive last week. So you should have a bar chart in front of you where you see benchmark rates from different countries. You have the US at 5%, you've got Hong Kong at 5.25, you've got England at 5%, you've got Nigeria at 27.25, Turkey at 50%, Brazil at 10.5, South Africa at 8, Angola at 19.75. And we talked about this last week. By keeping that interest rate differential higher, investors in the world, other markets where interest rates are low, will want to take their money into a Nigeria, into a Turkey, into a Brazil, where rates are higher, in order for them to get a return on their investment. And then because of that, your securities are attractive. It impacts on your exchange rate in a positive fashion. Finally, I think this is my favorite point that Governor Olayemi Cardoso mentioned. Listen to what he said about the fight against poverty.
And let me conclude by saying that as far as I know, there is no economic model that portends to take people out of poverty when inflation is accelerating at the levels that we've seen it at. There's none. And for that reason, we do not intend to relent on ensuring that we bring it under control.
And just to emphasize on that point, remember Wale Edun was at an Access Bank forum last week. Bosun Omofaya, very own Bosun Omofaya covered it. Listen to what Wale Edun said about the targeting single-digit interest rates.
We have challenged ourselves to, in the nearest future, provide Nigerians with near single-digit interest rate, 25-year mortgages, so that we ignite the construction sector, we ignite the opportunity for people to have housing.
It's a very nice line. It garners applause, right? And also, President Tinubu at his inauguration, you know, he has also been focused on wanting to get lower interest rates. There's a quote from his inauguration speech where he said that interest rates need to be reduced to increase investments and consumer purchasing in ways that sustain the economy at a higher level. What Olayemi Cardoso has said here is that, listen, as long as inflation is elevated, you cannot reduce poverty and you can't get lower interest rates. You must address inflation. That is our update for today.
I mean, it's basic knowledge, Rotus, because we know inflation is a thief of destiny. When prices are high, makes your currency worthless, destroys your purchasing power, it kills opportunities. And what is poverty? Passing over opportunities regularly. High inflation, businesses cannot go lend at an admirable interest rate. They're in panic mode. There's no economic productivity. And that's why the hike in interest rate yesterday, I got a call on a lot of business owners. Most of them will start getting letters as of today that their loans will be repriced. And that's the sad reality. So it's a tough balancing act. I know we need to fight inflation, yes. But also, we need to spur productivity. We need to be able to get economic growth. This will dampen economic growth. He made a valid point, yes, about core inflation. It's still a very sticky issue. But the question we should ask is, this money circulation that is precipitated by FARC, distorting the foreign exchange, can't people talk to those governors? Going ahead also to distort the equilibrium of money circulation. I was reading somewhere that the money circulation, they said, was over 90 billion, has even increased. You get? So the question is, can't we talk to all of these factors? He has also said that they are not doing ways and means. That means they are not printing, which we would like to believe. But all of these distortions in this ecosystem, can't we fight them? Can't we bring back that policy of taking that liquidity out of the economy? Because even in the first place, go to the banks, you can hardly get money. And we are saying we have so much liquidity in the economy, but you can't get money from the banking system. So what is really going on? Why do we have an imbalance in this system? And I feel for the businesses that today they will soon start getting letters from their banks. That's what we should also care about.
All right. I love how you juxtapose these stories. I want to focus on Nigeria. I think that's where the shoe pinches most for me this morning because, you listen to the remarks from the governor of the CBN. I mean, very beautifully stated. It was almost a moment for me where I felt like I love that he's drawing the line and he's he made a business case for himself and for CBN to say, guys, given the tools that I have, this is all I can do. And in essence, by highlighting core inflation, what he's saying is that, well, what government has been telling you guys that the reason why we're struggling with inflation is because of food, and when there's food in the markets, the inflation will come down. He debunked that because he said, listen, ultimately core inflation is still going up, right? So, and of course, core inflation takes away those seasonal price changes. So now it's quite interesting to now hear from Wale Edun and from a president saying, well, interest rates will come down to single digits, when, he then very cleverly put in that a major issue we're battling with is FAC. It comes back to the fiscal. So on your part as CBN, you can see CBN is using all they have available to them to try and tame this, the runaway nature of this economy at the moment. However, all fingers point back towards the federal government, because federal government, at the end of the day, what are you doing with regards to tightening the fiscal? what is the core of the core inflation, right? Because even if we remove energy prices, we're still battling with the fact that government's expenditure does not reflect the state of the economy and is further driving and pushing us into a more difficult place. So I really enjoyed this conversation, and I really love the fact that the central bank governor just came out and said, I'm not the enemy. In essence, he very diplomatically said, guys, I'm sorry, it's going to hurt, but this is what I have to do. Please go and speak to your politicians and let them know that they also need to start doing what they have to do so that you can start feeling the positive impact of the reforms that I'm bringing into the system. So I do hope that, you know, it's almost like we're living off of hope now. I do hope that at some point we can see, especially concerning that FAC, and this money, how it's not accounted to. And I know, Rotus, you've always been an advocate of let's look at the subnationals, right? So really, let's take a closer look at the subnationals. And like they say in all those movies, let's follow the money.
Okay, I think we're spending too much time trying to explain the central bank decision through the MPC, deciding to raise interest rate. Hawkish stance, the fifth time, you know, in the last five monetary policy meetings. Now, I think it's a shocking decision. Yesterday, I was pointing out that there are two options according to the economists, either, you know, to hold rates or to lower rates. Now they've decided to increase it. The reasons they have given are very straightforward. They want to attract international investors. They want to address fiscal deficit. They want to stop the acceleration of core inflation, which is currently at 32.15. Food inflation is high. They need to stabilize the exchange rate. Okay. What I find surprising is that the Central Bank of Nigeria is running against the global trend. I think we always talk about orthodox monetary policy here, you know. In other places, UK, New Zealand, Canada, China, Japan, they're either holding rates or lowering rates. Nigeria is a very peculiar case. That's what I take from all of this. And the additional question is to ask, what next? What next, in my view, is that borrowing rate will become more difficult. Nigerians will suffer more, and you have to measure this in terms of the hardship that this government has again imposed on the average man. Olayemi Cardoso was talking about fuel price, energy prices, and all that. It means that Nigerians will suffer more. Now, let me go to China. In China introduced a slew of measures this year to make things easier. Okay, and the yuan increased. Onshore yuan increased by 7.01%. Offshore yuan increased by 6.0719%. So you saw some development. The bonds in China appreciated. There has been an afterglow after the measures introduced by China. What is the afterglow in Nigeria? The afterglow in Nigeria is that we're going to suffer more. So what is next for Nigeria? This textbook approach to the economy is not serving our interests. I think that is what we should be worried about. You like to talk about oil. Yesterday, OPEC released its 2024 outlook report for oil. Now, OPEC is very optimistic, very bullish, saying that by the end of the decade, oil production will increase to about 112 million barrels per day, compared to 102 million barrels per day as of 2023. But there has been a controversy in this regard. So the main story is that the International Energy Agency, for example, is saying no, OPEC is wrong. So, but the big argument is that IEA and OPEC Plus, they don't always agree, whether it's post-growth or post-oil. IEA is committed to a zero, emission, target, but OPEC Plus wants to sell oil. So all of these, are the issues that will be determined, in the immediate future. By the way, Boeing has extended the deadline for their striking workers from Tuesday next week to Friday. Will they agree the 30% offer or not? That remains to be seen. And they have a problem with rice in Japan, but that's another subject. We're talking about scarcity here. Now in Japan, they are dealing with rice, and it has to do with population. The old farmers are getting old, and young ones don't want to farm. And tourists are coming in, and they want to eat sushi. So you are the one talking about population, but maybe one day we'll look at that. Thank you very much, Rotus.